It is Sunday, August 18th, and this is a week outlook. We're going to have a SPY analysis, look forward to Jackson Hole, what's going on with the Feds, various trade ideas, and more. So let's get started right away. First thing I want to start with is the week calendar outlook here. This is just something for everybody to notice, and I put this up on X. It's important to recognize DNC convention. It's just bracketed off. That's not a specific market event, but it deserves our attention. Geopolitical events always do in case there's something extraordinary that happens. I don't expect that, but it is on my radar because expect the unexpected in this political cycle. FOMC, Fed minutes, that's a dark horse item for the week because we are now in a period where we're discussing rate cuts. And so we could have something that sparks the markets there. And this is going to be from July's meeting. Then, of course, initial jobless claims, I've highlighted several, but the star, as you can see, the stars here is Jerome Powell at the Jackson Hole retreat. And as I've broken down for insiders, I'm sharing this with everybody. This is an insider access video, but I'm bringing it to the public just as a free week outlook preview and just to help everybody along with their market analysis and give you an idea of what you should be looking for. Look, the Feds have everything they need. Okay, unemployment is trending up. We've seen that tick up. Initial jobless claims, and same thing with continuing jobless claims. When you look on a week-to-week basis, you're going to see a lot of this, a lot of up and down, right? The Feds aren't concerned with the variations from week to week unless it's something enormous and catastrophic. What the Feds are looking for is the trend, and this is a clear trend from January. This is a clear trend from January. Initial jobless claims are rising. Continuing jobless claims are rising. Unemployment has ticked up, but it's not to a point where they're in any sort of panic. What about inflation? How's that? There's your very clear data-driven trend. And now the Feds need to pivot from data-driven to looking forward. You can't always be looking in the rearview mirror. Otherwise, you'll eventually crash, right? And then it'll be a matter of repairing things. And the Feds are very conscious of that. We've seen a stream of Feds begin to change their rhetoric. Last week was a strong week. This is what happened on a dovish Fed last year. And that was Chair Powell coming out and saying, we're in a Goldilocks place. Unemployment looks good. Everything looks good. Markets are in a good place. So we made a 4+% move up. Why did we eventually move down? Because it was on air, right? The markets felt that, all right, we're not cutting just yet. But since that period in October, we've rallied substantially and with dips along the way. This has been a very strong rally. So last week we had a lot of good ideas, and I'm going to touch a little bit on SPY first. So take a quick look. We looked at the markets as having a breakout opportunity because what I explained to insiders was the entire dip, crash, whatever you want to call it, was erroneous. And I stood by my guns, and I knew that the vast majority of analysts would be wrong. I posted something on X saying this idea of an emergency cut is wrong. We're not driving into a recession right now where jobs are falling apart and it's throw your hands up in the air. It was on an erroneous claim that did not factor in that a lot of the unemployment came from things like the hurricane in Texas where 2 million people were without power. If you looked on the state level, jobless claims, they shot through the roof. And of course, the BLS didn't factor that correctly. So we had trade ideas and we looked for a sell-off early and then a breakout through 542.55. This is taken straight from Discord. 542.55. Let me get on the intraday level and sort of explain the idea here. We felt there would be a sell-off, right? The markets would sell off and then we'd break. We'd test, break, and that's our point for the breakout on the markets. We felt that would really be the break to the upside. Of course, you could have played it perfectly, played some of the earlier action, 542.45, and here we are, 554 to close the week out. From that point, gapped up strong in the after hours and continuing positive data drove us higher. You probably saw some of these posted online. So that's what I'm seeing for the SPY. SPY is going to be driven by the Fed rates, right? And that's going to be driven by what Chair Powell says. Keep your eye on the FOMC this week and Chair Powell. Remember, we could front run based on the FOMC minutes. That tends to be overlooked because usually it's a little bit boring. You don't get a lot of insight. We're going to hear and get an opportunity to see who's discussing rates and what the proposals are. So that's a dark horse to watch. NVIDIA, one of everybody's favorites, posted this online. I called for resistance at 125 and rejection. NVIDIA rejected, and I use the term to the penny in case anybody doesn't know what that means. It means to the exact penny. I broke that down in a video because we had an idea on NVIDIA, and this just helps everybody with their trading and ranges and ideas. I had an idea for NVIDIA for a breakout from 116, right? We dipped under 116 and broke up. And then we're discussing, did it make sense to continue trading up on NVIDIA, right? To continue attacking. And I said, well, it's risk to reward. It's asymmetrical risk opportunities that I'm always trying to identify. And that's how it works if you're a market analyst, if you're working for any fund, if you're a fund manager, if you're in the markets, what you're trying to identify is asymmetrical risk opportunities, right? So if, in case you don't understand what that means, a symmetrical risk opportunity would be if I flip the coin. There's equal chance of landing on heads as well as in tails. So it doesn't make sense for me to deploy my capital there. That's silly. That's not how you build wealth. That's not how you succeed in life. You want asymmetrical risk opportunities. If I flip the coin and I say, well, if I get it right, I get $5, and if I get it wrong, I lose 1, I will play that all day long because it's your infinite money glitch. So asymmetrical risk opportunities, if I'm looking at a breakout from 116 and I see strong resistance and rejection at 125, and here we are opening the day at about 123, what I'd rather do is, rather than say, hey, play the upside because we can continue to the resistance point, play the rejection because the odds favor you. Even if the size of the move is the same, it's where the odds favor it happening. And when I say to the penny, look at the high. You can see the high here. High, 125, rejection. 125 touch, rejection. 125, harder rejection, down. And that's down with momentum, so the IV improves and increases on your contracts. Another one, so that's going to be one to watch this week. But what I will say is I think that absent of a catalyst from the FOMC, I think NVIDIA, you have to look forward to earnings, right? So you could be lifted by the catalyst, that is the FOMC in Jackson Hole. But remember, earnings are right around the corner. And forewarning to everybody, this will guide AI stocks in general. There is a lot of focus, even if you're not holding a position within NVIDIA. I think it would be reckless not to pay attention to what happens with NVIDIA in the earnings and give consideration to your positions as such. If you're working with anything that is tied to AI, and that's everything. That's a lot in the growth name anyways, from Palantir to Alphabet, aka Google, to Microsoft, to Meta, they all have a relationship to the AI space, and NVIDIA is going to be very important to watch. Another one that we traded around last week, this was another insider play. Again, such a great opportunity. When you can identify where the markets are wrong, that's an asymmetrical risk opportunity. And I'll touch on that more in a moment. This is an intraday trade idea for insiders. You can see very big move through the market. Our target was 168.77 intraday. We discussed the likelihood of a test, reject, then breakthrough occurring. And a little bit of this is where, because it speaks about some of our forward ideas, but just touch on Amazon. Amazon was one of those names that was lagging, right? And I'll explain what that means in a moment. So here we were. This was a buy idea within insider access. And I'm going to explain this just to give everybody a little bit of inspiration for some trading ideas and a bit of overview. And then again, break out at 168.77 as an intraday trade idea, meaning, the lower point was a swing trade on Amazon, and then we look for an opportunity on a breakthrough. And I said we watch for a test and a rejection early, right? And that's what I discussed here. You can see, where does it say? Test, reject, and then breakthrough. So test and reject was right off the open when it's volatile. That's okay. We rejected, waited for the breakup, and then got your breakthrough and continue running. So what am I talking about when I say the asymmetrical risk opportunities are presented by the markets? This period where everybody was wrong in the markets, except for insider access, my work, my analysis, my team. I put it against anyone in the world. When the markets drove down, I explained clearly to insiders, this is a miscalculation. And that's when you jump on opportunities. So a lot of those opportunities were this dip, Amazon, NVIDIA. That's where a lot of those names as re-entries, opportunities to move in after having taken profit earlier in the year. That's the idea. What I would say to everybody is monitor your securities. Those names that have not bounced back from that period could be of interest, because we should be returning to previous market valuation, unless there's something specific that's changed within the security itself. But if the security sold off because of market conditions, which is what the vast majority did, right? If I look at this chart, you see NVIDIA dipped, you see Amazon dipped, you see Meta dipped, and Meta is one of our biggest plays here in Insider Access because this was an entry idea. This was an entry idea, and this has just been rockets away. We jumped all over Meta because it's one of the names that I have targeted a little bit more frequently in 2024. But you're seeing a trend amongst growth names, right? Apple had the same thing happen, that dip. You're seeing just across the board with tech, with growth, right? So that's a miscalculation by the markets with a strong rebound. So if you're looking at a security that you've been following and nothing's happened specifically, but it is still lagging, I think that presents potential alpha. Of course, dig into it a little bit more. What do I mean by alpha? A little bit of catch-up opportunity, right? So if you haven't fully bounced back to previous valuations prior to this correction crash, it could be that you're also looking to see what the rate environment shows, and there could be a little bit of slowing down coming into this week. But that's where a lot of the golden ideas lie, is in recognizing where markets misprice, right? The great one that I give a great example of, and the reason we got so aggressive on Meta was what I explained to insiders was, and insiders listening will know this, we just had a valuation period for Meta. What do I mean by that? Earnings. Earnings is a period when the markets can value a company and get a more accurate valuation and understand, here are the results, here are the forecasts going forward, this is where this stock belongs, right? And so post earnings, right, we were up to 521 and the security, Meta, had momentum to continue higher. Then we had that sort of panic crash, concern about falling into a recession on the erroneous jobs, non-farm jobs report, and everybody panicked and sold. And my view was that was wrong. And therefore, Meta will be one of the names that breaks back up faster. And one of the fastest movers from 450, we peaked all the way up to 540. That's a 90-point move in just a handful of days. Why? Because the markets had already valued Meta. So we knew we were going to come back to the 520 zone, right? Because if it's not an overarching market issue, and everything is all else equal with the markets, and we know that we're back in evaluation points with the markets, then Meta should return to where it was. So that's sort of a simple analysis. Now, why did we project Meta ahead of that? That goes much deeper, but we were bullish on Meta going into earnings, and this is where we stand. So if you see similar ideas and opportunities, that presents your potential opportunity. Again, that's it for tonight. I hope that's helpful and shapes the week for everybody, give you a little bit of insight, a little bit of what we do with Insider Access. Insiders, stay tuned. We're going to go much deeper. We have an outlook on a variety of different items, trading protocols and strategy as we approach FOMC Day, aka Jackson Hole. We're going to talk a little bit about what's happening with the DNC convention and a handful of securities. Stay tuned. Everyone else, thanks for joining us tonight.